don't start with a podcast. He's like, you should start with a newsletter, right? It's a better way to like capture an audience and get them to read your 5, 10, 15-minute newsletter versus, asking them for 30, 60, 90 minutes on a podcast. And it's also a much better way to kind of own your audience, have more data and interaction via a newsletter.
This podcast is brought to you by Sponsy. Here's how to cut your ad operations time by up to 40 hours per week. As you probably know, managing inventory across multiple ad products and publications is really hard. And if you're tired of using Google Sheets and sending dozens of emails back and forth with clients to get approval, listen up. There is a better way. Sponsy allows media companies to easily track ad inventory and work with clients to get ads approved and reports delivered. They make it very easy. Sponsy connects directly with your email service provider, for example, Beehive, Campaign Monitor, and many more options, and it sends reporting automatically to the advertiser, saving you time. Newsletters like TLDR Newsletter, The Peak, Stack Marketer, The Rundown, and many, many more are using Sponsy to streamline ad operations and save up to 40 hours per week in sponsorship operations time. It's the all-in-one sponsorship management platform that you need. Sponsy is going to help you save time, automate your workflows, remove manual processes, and improve your client's experience. So if you want to spend more time on what matters, growing your newsletter, creating content, and driving sales in your business, I highly recommend you try Sponsy for free today. You can go to getsponsy.com/Matt, or you can click in the podcast description of this episode to check it out. A lot of my friends and clients have used this product, so I am a really big fan. There's also been some new things about Sponsy that happened since the last time they've been featured on this podcast. Pricing now starts at only $79 per month, a much more affordable plan that is a lot more accessible than what Sponsy was before. So they're making a lot of progress. Another really cool thing they just released is their own storefront. Publishers can sell their ads on a self-serve basis via the Sponsy storefront, and Sponsy takes a 0% commission on that, which is huge. Other storefronts out there take a commission from you and also many times your advertiser, which doesn't really make any sense. So that's a cool new feature they have. Sponsy also has a built-in deal pipeline to help you manage an entire sponsorship campaign, and it natively integrates with a CRM like HubSpot, for example. So really cool. Check it out at getsponsy.com/Matt or click the link below. Okay, I am here with Alex Pattis. What's up, man? How are you doing?
I am good. Pumped to be chatting with you here.
Yeah, we've known each other for a long time. I feel like you first emailed me to be like 6 months or maybe even a year ago now. And I've been following along your newsletter journey for almost a year now, maybe more. So it's been fun to see what's been going on the past year or so. Is that right? Like, when did we get connected originally?
Yeah, I would assume. So I think we've been running our newsletter for just over a year, maybe 13 months. And I'm pretty sure it would have been like, if not week one, definitely month one of us reaching out to you. I was asking around like, who are the newsletter growth guys? And your name came up, bubbled up more than anybody else. So I think that is why we reached out.
Yeah, and I definitely saw potential from day one. So tell us, what is the name of your newsletter? What's the name of your business? And what do you do?
Yeah, so the free newsletter that we run is called Last Money In. And pretty much we talk about syndicates. So these special purpose vehicles, which are kind of a way to invest in the venture capital asset class, very similar to a traditional venture fund, but also a lot of kind of differences, as a traditional venture fund raises a pool of capital, and that, finite amount of capital is deployed into a bunch of different companies. Whereas we, as syndicate leads that raise these special purpose vehicles, we pretty much find a deal, then we go to our investor base, our LP base, and raise money for that specific deal. And we can do that as many times or as few times as works, based on both our deal flow on one side and then the investor base on the other. So Last Money In has really been a weekly newsletter where we kind of go deep on a specific topic on these special purpose vehicles within the world of venture capital. And yeah, I guess like my partner Zach and I, we've been doing this for 5 or 6 years together. We've done 800 plus SPVs. So I'd like to think that's as much experience as exists out there, and realize, yeah, there was tons and tons of venture capital content that exists, but nothing that was going super deep on our niche of special purpose vehicles. So Yeah, been running
Yeah,
this for a year plus now.
that's kind of what I observed when we first started chatting, and that's what I like to see when it comes to a new newsletter or a media company. There's like a clear industry, it's growing, people need information, but no one has covered this specific topic within the industry. It's kind of like, I like to say, like pick a niche, then go 1 to 2 levels deeper. And you did a really good job with that. Tell me about when you first started writing Last Money In, like who was the ideal reader for that? Was it people who want to invest in syndicates? Was it people who wanted to create syndicates, something else, all the above?
Yeah, I mean, I would say it's all the above. Like there's really two audiences that we primarily speak to. The larger one is those individual accredited investors, right? So folks who maybe are not necessarily in venture capital, but they want to invest in startups. They want to get access to a lot of these venture-backed private companies that, there's just a lot more barriers and hurdles versus public market businesses that you can buy and trade in. So that's the primary audience, right? These are the folks that have invested in syndicates and deals with us that we've been running over the past 5-6 years. And we just really wanted to be a lot more transparent on how things work from our side, how we think they should be thinking about deals and so forth. So that's the primary audience. And then the maybe secondary audience is, right, those who are looking to maybe break into venture capital, start these syndicates, and put together these special purpose vehicles like Zach and I have been doing. And I guess be super transparent to them as well as to, here's the challenges, here's how you'd start, here's the things to look out for, and kind of run that playbook.
Tell me about this, because this is going way back. I think when you first were interested in starting this, you were thinking about a podcast, and Sam Parr might have gave you some advice. Can you tell us that story? I thought that was it.
Yeah, it's funny. So Zach and I, we decided we wanted to partner up and do some sort of content for special purpose vehicles. I guess just being consumers of podcasts, we're like, okay, this is what you're supposed to do. We should start a podcast, right? And we are actually in LA for this like Hampton Founder event with Sam. So I was visiting LA, as was Sam, and Zach lives in LA. So I pretty much reached out to Sam. I was like, hey, we got this idea. We want to like just get your feedback. And we pitched him the concept. And I think he immediately bought into the content and was like, that's a good idea. But he was like, don't start. I mean, he was very clear. He was like, don't start with a podcast. He's like, you should start with a newsletter, right? It's a better way to like capture an audience and get them to read your 5, 10, 15-minute newsletter versus, asking them for 30, 60, 90 minutes on a podcast. And it's also a much better way to kind of own your audience, have more data and interaction via a newsletter. And I mean, he sold us on that. We bought into it and we were like, okay, cool. Like we walked out of the meeting. We're like, I guess we're doing a newsletter. But he was also able to point to some of his experiences, and starting with the hustle, which obviously you played a role at, and then going to my first million. And I think that played.
Were you happy with that decision looking back now?
Very happy.
That makes sense. And I think you would have made a lot less progress if you did the podcast route. And I've kind of given similar advice, but it's cool to hear that from Sam because he's got high level experience doing both things, like some big podcast, 2 big podcasts now, and 1 big newsletter. And so that is, we say this a lot, but like we think email is the best owned audience channel. And the great thing about that is you could use that to do a podcast later if you wanted to, if that makes sense.
Totally. It was a good pitch, and he carried a lot of weight, and it was very clear walking in with the podcast route, walking out with, all right, we got to figure out how to do this newsletter thing.
Yeah. And when you first started writing the newsletter, so we talked about who the audience is, but what type of value were you delivering? Did you have like, this is our job to be done, this is the type of content we're going to publish, this is how we help people? Did you have that at all? If so, let us know. If not, like, let us know how you just figured out what are you actually going to put in this newsletter and how it's going to help people.
Yeah. I mean, I think we really wanted to just start with what are topics that Zach and I know really well from doing 800 SPVs, deploying 200 million, that maybe are less understood through other folks who are participating in these deals or want to run these deals. And I think we kind of just started with that thinking. And over time, I mean, we kind of just brainstorm every week, like what is an interesting, relevant topic? What do we think people don't understand or maybe have like gut reactions and understandings of, but we can break it down way further and give perspective, examples, and just like more rationale explaining kind of why syndicates operate this way. I mean, I think one of the things that we consistently hit on and try to explain is the difference between syndicates and venture capital funds, because I think there's a lot of, right, we're both kind of doing the same thing. We're investing in startups, but the ways we go about it, the economics, the incentives are a lot different. So I think that's one of the kind of overarching topics that we constantly try to explain, as well as here's why we do this and kind of the nuances within SPVs.
Yeah, were there ever any frameworks that helped you write the content early on? Did you list down common FAQs? Do you list past experience that you had that you could write about as kind of like a case study? Anything like that come to mind? Not everybody has this, but I'm curious.
Honestly, not a ton. Like, we have an idea bank, right, that we kind of constantly upload, because I might be going for a walk this afternoon and you would get a response from one of our LPs about a deal and be like, wow, this is like a great topic that we should write about. But in terms of frameworks, like, yeah, we haven't done much. I mean, frankly, while I'm excited what we built and I stand by our content, I think as newsletter operators, we still have a bunch to learn. And the way in which we kind of operate or do this is Zach and I switch off every single week. So he will write or lead the newsletter one week, and I'll kind of suggest edits before that goes live. And then I will take the next week, and we've kind of stayed true to that every single week.
I like that. I was going to ask about that. I think that's a good way to do it if you have a co-founder and you're doing a newsletter together. And I think most people are the same way. Like, I don't have any frameworks. I just have an idea bank. That's all I got. Probably a good idea for everybody to have a little bit of a better system, but I haven't really heard any good stuff out there, but that's why I ask you. Let's walk through some of the numbers if you can share them. And I want to talk about Deal Sheet after that, because that's become probably the fastest growing part of your business, right?
Totally. Yeah, we can get into it.
Yeah, so you shared some stuff over email. Can you share like what revenue looks like for Last Money In and Deal Sheet in the last 14 months? Anything you can share would be awesome, just to give some people perspective. And then also if you can share some, how many subscribers do you have, that type of stuff too.
Yeah. So Last Money In, we are just over 41,000 subscribers. In terms of revenue, so I'd say this is unique to most newsletters we see and definitely that you're familiar with. So from a revenue perspective, we're doing about just shy of $200K a year. That is primarily driven through just 2 annual long-term sponsors, right? So I am very excited about, I'd say I'm excited about the revenue, but I'm also equally excited about working with great partners in Forge and Sidecar. And I'd say the beauty of the relationship is there's so much alignment, right? So for one, we're customers of both Forge and Sidecar. So there's alignment in that regard. But I think also like Forge being a marketplace for secondary trading, so connecting buyers and sellers, we actively are investing in or buying blocks of shares from existing investors or employees. So like this is hyper relevant to our business. They're a service that we use. Sidecar, our other sponsor, they're a special purpose vehicle kind of admin platform core to what we do in running SPVs. So yeah, it's been good working with both of them. And then I guess like one of the best parts about it is like I literally had a call this morning with somebody who was maybe interested in sponsoring the newsletter, but like we don't really have inventory unless we're going to do one-off deep dive. So I don't find myself spending any time like trying to sell inventory. Rather, I hope
that can be good.
Keep these customers. Yeah.
Yeah, I want to circle back to that later. We should dive into that because I think it's really relevant to a lot of people, this type of sponsorship structure. Tell me about Deal Sheet. I don't want to go too deep into like a 5-minute description of what it is and how it helps. But tell us what it is. Tell us the revenue for that if you want to share that. Because are you breaking those out separately, like Last Money and Deal Sheet when you?
Yeah. So
yeah.
All right. The high level Deal Sheet. Accredited investors will pay us $4K for an annual subscription to Deal Sheet. You pretty much get 2 things. One, you get curated weekly deal flow. So we are going to share, we say between 1 to 5 deals. It's consistently been 3+ in our 28 weeks of running this. And these are deals that are being run by syndicate leads. So part 1, you're getting, let's say 3 to 5 plus high quality deals that are being run by syndicate leads. Part 2 is more like the economic side. There's this thing called carried interest, which is how syndicate leads make money. Instead of the standard 20% carried interest that LPs pay via deal sheet, it is 10%. So 50% reduction in the carried interest piece. So that's how it works. We've got, I think we're at like 170, maybe between 165, 170 subscribers. Yeah, we just crossed 500K ARR in between 6 and 7 months, which we're excited about.
Yeah, so you started it 6 or 7 months ago. And did you start Last Money In about 14 months ago? Is that?
Yeah, we started Last Money In 14 months ago and deal sheet right at the beginning of February this year.
Okay. I think that's good to explain because you've been growing quick and it's good to give that context. So just to clarify, let's break down the revenue streams. So you have sponsorships in the newsletter, those 2 long-term sponsors. You have deal sheet. And deal sheet, different name, but same business. And you've used your audience and your past connections to grow deal sheet. So it's not an entirely separate thing. It's all connected a little bit.
Yeah.
Any other revenue streams for the business outside of that?
Through the investing business, there are different revenue streams, which I can get into, but that's a truly different business.
Yeah, we're going to talk about the media business and I guess we go with deal sheet media too. It's kind of a unique thing.
Yeah. So right now, no, those are the highly focused on great annual sponsors for the free newsletter, individual accredited investors looking for more access to startups and really just focused on that. I mean, brainstorming some stuff, which I'd love to do with you for the future, but that's what we're focused on.
Yeah, that's great. And I don't think, a lot of people say like media companies need to diversify revenue, but if something's working well, you don't need a dozen different ways to make money in a business. Although for some media companies, that is a good idea, right? And media just I think it lends itself naturally to diversification because you build up this audience and you can sell that audience different things, right? Advertising, affiliate, membership, events, etc. But yeah, we'll talk about that. And I want to dive deeper in the deal sheet. But first, let's talk about the long-term sponsorship thing. Because I think this is interesting because a lot of people just don't think this way. They think I'm going to sell ads for $1,000 a pop, $500 a pop. I need to go and get dozens of sponsors and, sell them packages of 1 to 3 ads. And that's a really hard game to play. But when you operate in a niche, especially a B2B niche like this, a better path is to have fewer, bigger sponsorship deals. And so how did you come to that conclusion? And if you fell into it, let us know how this happened, why you decided on these 2 long-term sponsors.
Yeah. So I think we knew we wanted to do long-term sponsors, right? I think the idea of, building out a sales function and team to sell all this inventory certainly seems challenging. But at the same time, I don't know, that kind of feels like the norm. We kind of got lucky, right? I'd like to think, right, our content was unique, right? Right when we came out with it, literally week 2, we had somebody from Sidecar reach out, right? They're a platform that supports the admin of special purpose vehicles. We're a newsletter that talks only about special purpose vehicles. It was clear that there was a ton of synergy there. So we kind of got lucky there. We did a little pilot with them. And then that led to kind of an annual sponsorship. And I think that kind of geared a bit of our thinking of okay, this is obviously easier to go much deeper with one single partner and not negotiate every week, month, whatever on pricing. So if we were going to do, more sponsorship with other partners, we were going to try and do it on that model. And that's essentially what it's been. I don't know what life is on the other side of selling all that ad inventory, but I'm also not interested to find out. Yeah.
Yeah. So you did the pilot, then you did the long-term deal with them, and then you kind of used that model to close the next long-term deal with the other one, which I'm forgetting the name now.
Yeah. Forge. Correct.
And tell us we don't need pricing details, but what did the pilot include? What type of ad placements or products? I mean, this has been a while, so approximately what that looked like. And then tell us what those companies get in the long-term deal, how many ad placements for how long, any details that you can share would be cool so people can structure their own deals like this.
Yeah. So they, Sidecar has their branding at the very top of the newsletter and also at the very bottom. we've made it very easy for folks who are interested in starting syndicates to get in direct touch with Sidecar and kind of get just very good customer service there. So, I mean, fairly straightforward kind of in the placement and the sponsorship there. Every once in a while, I think Agreed to Quarter will do kind of a deep dive with them where we'll go deep on some sort of kind of relevant hot topic in the world of special purpose vehicles, and kind of tie in maybe sometimes Sidecar functionality or how they're kind of tackling this to support syndicate leads. The other thing that's we enjoy, and I would think different from most of these contracts or deals, is we actually do a quarterly dinner. So we'll do an in-person quarterly dinner. We've done one in New York, one in LA, we did one in Austin, and then we're hosting one next month in San Francisco, where we kind of bring together folks in the syndicate community and just use it as an opportunity to, I guess, have a good time, network, hear what people are struggling with, what's working. And that's been a really fun kind of in-person dinner that is significantly different from, putting advertising out there on the internet. So that's the primary structure around that sponsorship and that partnership.
Yeah, I like it. So basically add in almost every newsletter, quarterly deep dive, sponsored deep dive, quarterly sponsored dinner. Very cool.
There's also some small stuff where like they'll write pieces, get quotes from us. I mean, frankly, even if we weren't in sponsorship, we'd probably do that also. And we'll try and definitely amplify everything on LinkedIn as well, which is a channel both Zach and I have leaned into over the past year and try and grow more of a relevant audience there as well.
Yeah. And how do you, what's the length of this contract, if you can share, or give us a ballpark on how long these things generally are?
So Sidecar was 1 year. Forge, we started with a quarter, and there's an indication to keep going longer, but still kind of discussing and finalizing.
Yeah. And you don't have a lot of these under your belt yet, but with Forge, was there a pilot phase, or was it just straight to a quarter?
It was straight to a quarter.
Or Forged, sorry.
Yeah.
Okay, that's good. And I think that's kind of a way to kind of bridge the gap there, where it's it's hard to get someone to sign a 1-year contract right away, although it does happen. Yeah. But a quarter is definitely doable. Yeah, I like that. I think some advice I've been given by Katie Huff, who's actually she used to work at Lausel. I think you know Katie. She's become a good friend of mine. She does some coaching for people in our program. But she was like, Matt, why don't you have, because I kind of have a very niche B2B newsletter myself. Why don't you have one sponsor for each different vendor category that's relevant to your audience? And that's it. And so you only have, 4 or 6 sponsors per year. And so that makes a lot of sense for a lot of people, including you. So that's awesome. Let's talk about Deal Sheet and how you've grown that, right? So it's growing fast, but it's still in the early phases. And did you cover price point of Deal Sheet before? We should mention what the price is too, because it's a fee.
It's $4K per year. When we launched, we started we've increased pricing a couple times, but we're currently at $4K per year right now.
Yeah, and so we've already covered the features on how that works. When you started Deal Sheet, you had some newsletter subscribers. You had people you've previously done deals with, has some social followers too. But how'd you go out and go to market, right? How'd you get the first couple customers for this?
So to be honest here, right, I view Deal Sheet as it's not your typical newsletter, right? We've kind of backed in this, deal flow sharing and better economics for existing investors. And I feel like we kind of backed into using Beehive as a newsletter platform to run this, which I think works extremely well. But it's not your typical for my more in-depth content, pay, $10, $20, $30 a month here. So I feel like it's a bit different there. I also think Zach and I were really well positioned to start this business. I think the free newsletter helped, right? I don't remember how many subscribers we had at the time. The topic was relevant. But I think what was actually better was the fact that we had been running syndicates and we'd done so many deals and have each of us, have multi-thousands of LPs who have invested in deals with us. And that just built, I think, a higher level of trust. I actually, like I kind of view our syndicate. This is something that's I've come to realize recently. I kind of view our syndicate as like our front end product if we're a media company, and Deal Sheet is like the back end product, right? So I've had thousands of people invest in these deals with me, as has Zach, and that was really the best foundation for us to launch Deal Sheet with, right? Because we're pretty much saying, hey, pay us $4K up front for the year, and we're going to deliver really high quality deals and better carried interest. And it's hard to just fork over $4K if you don't really know who we are and haven't seen that we've been doing this for years. But for the folks who have invested many deals with us and been an LP in our syndicate for years, I think it was just a lot easier because they're like, okay, great. Like literally if we do the same thing, but I pay this up front, and now I can see not just Alex's deals, not just Zach's deals, but a curated view of all these syndicate leads and get better economics on it. It makes a lot of sense. So that has really been the foundation of getting this off the ground and getting our first paid subscribers.
That makes sense. If they're going to invest with you anyways, why not invest with better terms, right? Especially when they're to trust you. What are the rules around not advertising Deal Sheet, but advertising like a syndicate itself? Are there restrictions around that? I imagine?
Yeah, it's actually a gray area because for accredited investors, if you're doing 506B, which pretty much it's like not this like crowdfunding style as you'd see with like a Republic and other companies. So you can't publicly talk about like the deals you're raising for. So that's very clear, right? I can't say, oh, I'm investing in, Matt's new company and post it on LinkedIn and be like, hey, whoever wants to invest, like, here's your opportunity. That's illegal. No. When it comes to syndicates, we've actually spoken to lawyers. It's kind of unclear, right? Because we're not saying, hey, everyone, like, invest in this specific deal. We're really saying, hey, everyone, like, we run a syndicate. We share a lot of different types of deals, and it's free to join, and you can invest when when you're excited about opportunity, and you can pass on every other opportunity. So it's a gray area. But what I'll say is we haven't done like public advertising of the syndicate really, just to err on the side of caution. But fast growing space.
I wonder if you could do more private marketing to basically build your top of funnel. As you mentioned, syndicate's the top of funnel, Deal Sheet's the bottom of the funnel, or front and back is the term you used, but same thing, right? It's actually a different thing, but similar enough, I guess. I want to get to that. One quick thing is like, have you basically done like more like less public, but like email marketing, where it's like if they sign up for less money and if they identify themselves as an accredited investor, send them an email that says that's advertising the syndicate, essentially asking them to join.
Yeah, so we've literally just started doing that. I think we didn't have a ton of success on, just getting in touch with people cold and us saying, we're great, we've got this awesome newsletter with great deals, pay $4K and you're going to start seeing it. I think that the very recent shift has been through, like let's build this funnel of individual accredited investors who are interested in the venture capital asset class and access to deals where they can choose where they want to invest. So we're really working on that funnel, which is kind of core to what we've been doing the past 5-6 years with our syndicate, growing that LP base. And then I would say, like, let's really qualify them through there, right? Like once they've actually invested in a deal and they've shown that they're truly interested, they're actually investing in deals, they're investing in deals that we're running, we're starting to build more trust there, then I think that's a better position to kind of do what I would call the Deal Sheet upsell to get more access, better economics from there.
Okay. And then what has been your sales and marketing process for Deal Sheet so far, as the stuff that's worked outside of the syndicate, basically going to your syndicate investors? Like outside of that, has anything worked well? Any type of process, whether that's like set up a call funnel, et cetera, et cetera?
I would say referrals have worked well recently, right? We're starting to get, I think, people who are frankly wowed by the volume and the quality of deals we're sharing on a weekly basis. And a lot of times, I mean, it goes both ways. Sometimes it'll be, hey, Alex, like would love to introduce you to my friend for Deal Sheet. I think, they're interested in more private deals and you should talk to them. And then the other one is like, hey, Alex, I just invested in, deal ABC. Can I share this with a couple of my buddies who are also interested in this deal or these types of deals? That's worked well. I think everything else related to like growing the funnel and like more digital marketing, frankly, we haven't made a bunch of progress, which I view as like a massive unlock for us in the future. But that's just not something that we've converted to deal sheet revenue yet.
Yeah, and it hasn't been that long, and so it makes sense to have a challenge there until you figure out what your sales funnel or process is. You probably could have more systematized referrals if you don't already over time, but that is good that you're getting those because the product is good. That's a good sign, right? If you're getting no referrals ever for a product, then
yeah,
that's the problem, even though you probably don't want your entire sales and marketing to be referrals. Yeah. One kind of riff off of referrals is, I think one thing, we talked about this a little bit, one thing you could do is, we talked about webinars and how that can be a way to basically sell a higher price product in this price range to a colder audience with less touch, like with less one-on-one sales. And so I still think that makes sense. But one thing you could do is basically do a referral or affiliate webinar where it's like someone with an audience that will be interested in this can basically co-host a webinar with you, but they don't present the content. They basically say like, hey, it's me and Alex on the call. Alex is going to cover these cool things. I'm going to pass it off to Alex now. You go through your webinar for 45 minutes or whatever, and then they hop back on at the end and basically transition into your close. And then you split the revenue with that referral or affiliate partner. That's a very common thing in I like the financial publishing industry, info products. And so if you've had a couple of those partnerships with people who have those audiences, I think that could be cool.
I think that's a great idea. I mean, one, we got to listen to you and get going with the webinars. And then two, yeah, like we have started to think through like who are the relevant or influential folks out here that I think could help kind of curate a really good audience, and an audience that's interested to hear more about not just Deal Sheet, but like syndicating deals, the ins and outs. So in short, I'm a fan of that idea.
Yeah, and it's just it's even warmer traffic than a webinar, right? Or warmer leads or whatever you want to call it. What do you think is next for Deal Sheet? Like, what are your plans? Because it sounds like you're going to keep doing last money and that's going to keep growing. But Deal Sheet seems like the bigger opportunity right now. Let me know if I'm wrong. But
yeah, I would agree. I think like the revenue driver from last money in is great. Like we like our sponsors. There's strong alignment. We're really focusing. I'd say we're optimizing that to continue to put out great, engaging content. Definitely helps us be like thought leaders and build what I would call a thought leader brand, given all the experience. But yeah, if we think about like strictly monetization, I think Deal Sheet is just a much larger opportunity. We're super bullish on the business model, right? Like it doesn't cost us anything to source deals we're already sourcing, work with syndicate leads we're already working with. And so it's a really high margin product, and it's a recurring revenue product, which, we'll see a year from now what our retention looks like. But I think the business model is tremendous. Now it's about us figuring out how can we grow the funnel? How can we also just consistently source better deals, work with better folks so that like the product is the deal flow essentially. So I think we don't have, we like brainstorm things like, okay, what's a front end product that could help Deal Sheet or other ways to acquire customers. But I think right now it's just, it's heads down, continuing to make sure we're getting high quality deals. Customers are happy with Deal Sheet. They'd be willing to pay at a much higher price, maybe figure out how we could raise pricing. But as you said, that's a long-winded answer of doubling down on Deal Sheet for now.
Yeah, it is a really good business model. Recurring revenue is nice. So it's like media is great, but when you can use a media product and audience to do something like this, I think that's even better, right? So I'm curious to see what you get out there in the near future of Deal Sheet, whether there's a lot of different opportunities. I think just from my ideas real quick, it almost seems like a marketing problem first and foremost. And so like figure out what is your like automated marketing channel or sales channel. One thing I've had success with is like it's hard to screw up a salesperson hire. And so I don't know what type of lead volume we're getting in now, but that might be something to consider in the next 6 months. It's like getting a salesperson in for this, because if you structure it right, it's really hard to screw up a sales hire.
How do you view that sales hire? Like, what I guess, what would that role look like?
So you want to make sure you have enough lead flow for them, right? And you want to make sure they can actually be able to close people on a call. So that's step one. Like, if that's not there yet, it's not quite ready yet. But they also, because you really don't want to hire a salesperson and then just tell them, like, just go out and find your own food and figure everything out for yourself. Like, they need leads coming in. They need some type of structure and process, and they're gonna be shadowing you initially. But you're gonna have, like, especially if they're more of a closer where, like, you're bringing in things inbound to them. I think you can start with, lower compensation of, like, a base salary of, depending on their location, 50 to 70K per year in the US, or outside of the US, as low as like 30 to 40K per year. And then you want them to earn essentially double that in commission. So if their base is 50K, want them to be able to earn another 50K per year in commissions if they actually go out and sell. And the commission rates on a general ballpark is like a 10% commission, but a lot of times you have like a waterfall commission where it's like, if you're X amount of your quota, you get a 5%. Then, like, the more of your quota that you get, the higher your commission is, potentially up to like 12 or 15% if they're exceeding 100% of their quota. I can send you what we do, but it's just when it comes to like media businesses, I think a lot of people just hire salespeople too late.
Interesting.
Because you have this like small base salary, incentive based compensation, it really makes it hard to screw up, and you can usually tell within 2 to 3 months if they're not doing a good job.
So that makes a ton of sense. I think, to get into the details, like, our situation is unique in that the best way to qualify these folks is have them be existing investors in our syndicate. And the sales pitch from there, maybe you could argue that like we should be doing more calls and getting on the phone with people, but the vast majority of the people who sign up for Deal Sheet, we don't speak to. It's an email. Here's how the offering works, and they join. Maybe there's a question on something here and there, and they join. So, like, part of me is very excited about that. Right. Part of me is very excited about that. But then the other part of me is like, we're not, like you said, there's a marketing problem. We're not generating enough leads to justify a salesperson, whereas we would love to have that problem, especially with new folks who then we could welcome to the syndicate as well.
Yeah, it's a good sign that you can sell like that. And so that's going to make it easier for your salesperson in the long run. Yeah, I think you have to have the leads first. And then, because you're just going to have to go beyond the existing syndicate investors eventually, right?
Totally.
And you know that, of course. And so that's where the salesperson can come and help, because sometimes you might have to, especially even early on, you might even have to have 2 calls. Like, the salesperson does the first call and then you close with the salesperson on the second call. You don't want that long term, especially for this price point. But
I agree.
But what you're gonna find is, if they're good, they're gonna do things that you're not capable of. You're gonna be like, how do they sell that to that person? I never would have even thought they were like a good lead, and I didn't realize something about them. They're just gonna have a different perspective than you. And so I think a lot of times you'll be pleasantly surprised by a salesperson, because the incentives are in line there. And so that's kind of how I see it. It's like, it's in some ways you want to let them kind of figure it out themselves, and get the high level details right for them, but don't push them into your existing structure, because they might have a better way of selling than you. And that's a lot of times they're just better at selling than we are. Anyways, not perfect. So I think those are like the 2 things I would think about. Is like, what is our lead generation? How do we get qualified leads in an automated way of marketing? And then later on, how do we hire a salesperson to just increase our conversion rate and just do more volume, right? Because you want to get to that point where you're not doing every single call yourself. But I think it's all going to work out really well. And like, the good thing is, like, you only really need one lead generation strategy. You don't need 12 different ways to get leads.
Right. Yeah. No, I agree. Definitely need to hone in on that like, we've got this great LP syndicate audience that works. But as you said, we're going to need to go beyond it, and we're eager to kind of crack the code or a channel there as well.
Yeah, I want to ask you about, like, so you've grown your audience, newsletter and social or I should say LinkedIn very quickly. So you got 30,000 plus LinkedIn followers, 40,000 newsletter subscribers for Last Money In. On the growth side, what has worked for you?
So we've kind of, I guess, pumped the newsletter in like multiple channels, right? So obviously we're running it on Beehive, and we are, putting everything together and sending it out there through a traditional newsletter. From there, we've both used LinkedIn a bunch, right? So like what I like to do is on Wednesday when we launch our newsletter, we'll do a post kind of around the like TLDR and kind of hype it up there. And then I will typically over the next week do more LinkedIn posts that tease out different parts of the newsletter. So it's helpful, right? I'm doing a lot on LinkedIn, but it's helpful. I'm pretty much like all the content, like I'm using the base of what we posted on Wednesday to drip out over maybe 3 more posts as different, like mini deep dives on a part of the newsletter. And I feel like that's just been a good strategy, helpful, and it doesn't require, right? It's like you create the content once and then leverage it multiple times. We've done some stuff with like some paid ads and figuring out how to grow there. We worked with folks on like email warming, which has been interesting. We've done some of the Beehive Boost, which we're testing now. A lot of this stuff has been experimental, like trying different things. I feel like that's what I'm learning in my 1 year of being a newsletter operator. Like nobody ever just like gets it on autopilot. You're always trying to crack it and try other things to grow faster. But those have really been the main channels thus far. Again, I've kind of said this. Maybe I'm a little biased, but I'd like to think that in like a growing ecosystem of individual investors looking for more access to startups and like the people trying to diversify into other like alternative asset classes, I think us going very deep in this ecosystem is truly like the only place you can get content like this. So I think that's helped too.
Yeah, you have you're a category leader, which is really important, and you've designed that intentionally, which is really smart. Another important thing I see with the newsletters that we have a lot of success with, they've done the same types of things.
Yeah.
And that doesn't mean you need to be super niche. Like there's just categories you wouldn't even think about that apply to hundreds of millions of people.
Yeah.
Tell me about the email warm up real quick. Like, did that work at all for you? So that's like kind of, is that sending to like targeted cold emails to people who might be a good fit? Is that how that works, or is that something different?
Yeah. It's kind of around acquiring emails that ideally could be a good fit for your target audience, sending them either newsletters or segments of the newsletters to try to get them to engage and join. And it's a little early to tell if it's working. Like we've definitely got plenty of folks. I'm not positive it's helpful for the open rate. I mean, I'm still trying to figure out how I should think about open rates in a newsletter, in our newsletter. So I do feel that it is working in that like subscribers are joining, but we need to learn more as to
still to be determined. It's interesting. We talked about this a little bit on the podcast that hasn't come out yet about that strategy. We're still figuring it out too.
Yeah.
2 more questions. Yeah, if there's one growth strategy you would double down on, which one is that?
For the free newsletter or paid, or does it matter?
Yeah, for free newsletter, growing your free email list.
That's a good question. I guess maybe diversifying, like doubling down on what I was just talking about on doing on LinkedIn on other social channels. Like for me, I've just gone all in on LinkedIn. I'm more familiar with it, and I was working with like a better understanding of the platform there. Whereas I have not, like, I'm a nobody on Twitter. I don't spend any time there. Excuse me, X. Like I feel like there's an opportunity to, go more viral there and win a bunch of subscribers there that I haven't touched, but I just haven't done to date.
Yeah, definitely. I think that's longing for a lot of people. And there seems to be a big, tech investor audience on Twitter too.
I know.
It's almost like LinkedIn's great too. That almost seems the bigger audience is there. a lot of the content can be the same on both. Okay, the last thing I want to cover is, what advice do you have for someone who wants to start a niche newsletter or media company like you've done in the past year or so? It doesn't have to be B2B, but just the idea of following the same type of path that you followed. Let us know what your number 1 or 2 bits of advice would be.
Yeah, I mean, I guess figure out where you've got unique experience or perspective that doesn't have a ton of, I don't want to say just content, but doesn't have enough like relatable content where people who are interested in the space can actually learn in the space, right? Like, I feel like that's what we figured out. And then from there, it was, all right, invest a lot of time and effort into putting out really good content that's educational. We don't have ghostwriters. We don't have any tools. We just spend the time like writing, editing each other's stuff, brainstorming what are the right topics, and just we've been hyper focused on what are things that we know about this SPV ecosystem that other people don't, or we could add more perspective on why something happens. And I feel like it's just really all the effort has gone toward good, eye-opening educational content, which has helped build a brand, which I think there's a lot of different like ways you could take it and monetize from there.
Yeah, you can't get outside of good content. If like there's 3 pieces of
it.
Yeah, like we got a sandwich here. It's like growth, content, and monetization. If you don't have content, the other 2 things are not going to be worth it or are not going to happen. So that's great advice. And I've had a similar path and perspective too. Cool. Where can people find you? Like, I think Last Money In is lastmoneyin.co if they want to go and subscribe. The link will be in the description below. Where else should folks go? And any last words?
That's the right place. Alex Pattis on LinkedIn, as I mentioned, definitely put out a lot of free content there and thoughtful content. Any last words? I mean, look, this is fun to talk about. Like, it's awesome to look into this a year and have built something that's exciting and growing, but I still also feel like I've got so much to learn. So I appreciate the content you put out because I'm listening to a lot of that.
Thanks, man. And I'm sure a lot of listeners will have, ideas or questions for you too. So,
I welcome that.
On LinkedIn.
Please.
Absolutely. All right. Thank you. We'll wrap it up here.